Welcome back to our YouTube channel, The Book Digest. In today's episode, we're diving into a powerful and practical summary of Stock Market Wizards by Jack D. Schwager. Now, this isn't just a collection of success stories. It's a really deep dive into the minds of traders who pulled off legendary returns during one of the most chaotic decades in stock market history. So in this explainer, we're going to distill their secrets.
So how do they do it? Well, here's the plan. First, we'll meet these wizards and get a feel for the absolutely wild market they had to conquer. Then we'll unpack their playbooks, and you'll see how totally opposite strategies could both lead to incredible success. From there, we'll uncover the one golden rule they all shared, talk about mastering the inner game of psychology, and see how each one of them carved out their own unique edge. And finally, we'll pull it all together so you can start thinking like a wizard yourself.
All right, so who exactly are these market wizards? See, Schwager didn't just find people who made a lot of money, he found the ones who absolutely dominated the 1990s. And you have to understand, this wasn't just any old decade, it was the market on steroids. It was a period of unbelievable chaos and, for them, unprecedented opportunity.
I mean, just look at the gauntlet they had to run. They started out in the shadow of the massive '87 crash. Then they had to navigate a recession. Then they rode one of the most historic bull markets ever, and then they had to survive the dot-com bubble and its spectacular implosion. To not just survive all of that, but to generate astronomical returns, yeah, that takes a lot more than luck. That takes a special kind of genius. Which, leads us to the most obvious question. How did they do it? What was their secret system? You'd think they all followed some kind of similar master plan, but what Schwager's book reveals is something way more surprising.
So is there one magic bullet, a single secret formula for beating the market? Well, Schwager's interviews give a really loud and clear answer: absolutely not. In fact, many of the wizard strategies were complete polar opposites.
Let's just look at two wizards with completely opposite approaches to see what I mean. On one side, you've got Steve Watson, a pure fundamental value guy. He's the one digging through balance sheets, calculating a company's real worth, and patiently buying businesses he thinks are on sale. Then, on the complete other end of the spectrum, you've got Tony Oz, a pure momentum day trader. He could not care less about a company's fundamentals. He's focused entirely on price action, volume, and just riding those powerful short-term trends. And here's the kicker. Both became wildly successful. This is incredible because it proves success isn't about finding the one right way. It's about achieving total mastery of your way.
Okay, so if they all use different strategies, what on earth could they have in common? This is where Schwager really strikes gold. He found a set of core principles that every single wizard lived and died by. And the most important one, the absolute number one, is this. They were all completely, utterly obsessed with managing risk. Mark Minervini, one of the wizards in the book, just captures this mindset perfectly. Before even thinking about how much they can make on a trade, their first question is always, how much can I lose? It's not the sexy part of trading for sure, but according to these wizards, it's the only part that guarantees you get to stay in the game long enough to win.
So what does that obsession look like in practice? Well, for Minervini, it comes down to a few non-negotiable rules. First, you set a predetermined stop loss. That's the point where you get out. No emotion, no second guessing, you just get out. Second, you use strict position sizing so that no single trade can ever deliver a fatal blow to your account. Third, you're always watching for correlated risk so that one piece of bad news doesn't sink your whole portfolio. And finally, and this one is so crucial, you always know your exit point before you even enter the trade. The escape plan is part of the initial plan.
Now, the second universal truth is just as important as the first. It's not about charts, it's not about spreadsheets, it's about what's going on between your ears. Every single one of these wizards had to conquer their own psychology, their fear, their greed, and maybe most of all, their ego.
Trader Stuart Walton has this great way of framing it. He calls it the shift from ego-driven trading to market-driven trading. See, the novice's goal is to be right. They'll hold on to a losing trade, digging in their heels because selling feels like admitting they were wrong. But the wizard's goal is simple, to make money. They couldn't care less about being right. If a trade goes against them, they cut it, period. They know that arguing with the market is a fight you will always, always lose.
And nothing teaches this lesson harder than failure. Mark D. Cook tells this just harrowing story of being completely wiped out early in his career. It was devastating for him. But he says that catastrophic failure was the absolute best education he ever got. It burned the importance of risk and discipline into his brain in a way that 1,000 successful trades never could have.
Okay, so you need ironclad risk management and you need psychological discipline. Got it. But how do you actually find profitable trades? Well, this brings us to the third key theme. Every wizard developed their own unique edge, something that was a perfect fit for their personality and their view of the world. So take Ahmet Okumus. His edge was what you could call concentrated conviction. While most of us are taught to diversify, Okumus believed that just dilutes your best ideas. His method? Do exhaustive research, find a tiny handful of incredible opportunities, and then bet big. For him, spreading his money thin actually felt riskier than concentrating it on the things he knew best.
Then you've got someone like Dana Galante. She found her edge in one of the toughest games there is, short selling. She basically specialized in finding flawed, overvalued companies that were poised for a big fall. Her edge was almost like a forensic accounting skill. She looked for red flags that other people missed, things like questionable accounting, or a big gap between the profits a company claimed and the actual cash they had.
And for a completely different, highly mathematical approach, you can look at John Bender. His entire edge was in the options market. He basically believed that the standard pricing models were just wrong because they consistently underestimated the odds of a huge market crash. So he built his whole strategy around exploiting that flaw, essentially buying cheap insurance against a catastrophe. So there you go. 3 wizards, 3 completely different, personality-driven edges.
So how do we put all this together? The real key lesson from the book isn't to go out and try to copy Mark Minervini's exact strategy. The goal is to internalize the universal principles that made all of them successful, no matter what their strategy was.
Schwager's final summary really comes down to these truths. First, risk management is everything. Protecting your capital isn't just important, it's job number 1. Next, you have to master your own mind before you even try to master the market. You've got to learn to think for yourself, because the biggest profits are almost always found where the crowd is wrong. You have to be patient. Wait for that perfect pitch instead of swinging at everything. And most importantly, you have to develop an approach that fits you. A strategy that doesn't fit your personality is a strategy you're going to abandon the second things get tough. And really, that's the ultimate message of Stock Market Wizards. It's not a book of secrets for you to copy, it's a roadmap for your own journey. It lays out all the non-negotiable principles for success, and then it leaves you with the single most important question you'll have to answer as a trader. The wizards found their edge. What will be yours?